You was mentioning that you was working in venture capital as due diligence officer. It's really good point. Maybe we can touch it because, majority of people who will be looking this, we are actually startup founders, and sooner or later we're going to raise capital. I know that the diligence process is unclear in most of the cases. If you could share some experience, what you as venture capital are looking in the deals and what is important, we will know where to keep the attention and where to keep the focus before we go to the investors.
For sure. I think there's two different things that people should be aware of. You're, as a VC, you're managing other people's money, right? That means you have great responsibilities to do a proper work and make sure they get a good return. So there's classic due diligence, which is you can just go Google it, right? Like you need to do market, team, tech, like all these different things you need to go through and make an assessment tool. So that's one part of the work. Classic business school, ABC. So that's one thing. So you really need to make sure that you got your classic things in order. And it's not that complicated it used to be, but really just try to make sure that you got a due diligence room, you got all your contract in place, you got all the basic stuff, because that's needed if someone is to invest into you. Of course, it depends on stages, but if you're more than just, I got a good idea, but moving into seed, a little bit later stage, just make sure you got your data room and your normal things into place, right? Then it becomes more intangible, where like an investor have a thesis to really try to understand the VC's thesis. In our case, it was, we believe that there's still some protocols that could pop up, right? So we really believe that we wanted to look into the attributes of a protocol. So we had quite a good idea about what protocol features we liked. Then we knew what kind of middleware solution that you needed. Like they need to be a wallet, they need to be custodian, they need to be staking, and then DApp. So it's about like try to understand the VC you're raising capital, what's their thoughts on it. So understand the investors. And then if it's the first, second, or third round you're raising, at the end of the day, it's all about the idea, market you are targeting, and then the team. So it's really like, can you quantify the narrative of what you're trying to achieve? I can remember the need to be a 10x in some kind of capacity. So is it a total new market you're trying to do, or is it 10 times cheaper for you to do it versus competitors? There need to be this unicorn potential, because as a venture capital, it's quite high risky. So you could even have a really good business, but it might not be relevant for venture capital because they're going for global markets. So it's really ensuring that you got a clear narrative of why you think your problem you're solving, it's going to be a 10x thing or 100x or 1000x, right?